Oh no, homework. It was homework. Tax. We are going to calculate tax. So go to Excel. Tax. Well, income tax. So here's how we calculate income tax. Taxable income. So where's taxable income? I calculated taxable income to be this number, but it's on my calculator here, so I can just cut it from there. That's one. So we have 129,167.75. Control A, format cells, number, use thousands. Okay, so taxable income is this. Now what do you do? You must split it into capital gains and other things. You must split it into different categories of income. So we have so capital gain, we have taxable interest. Business income is ordinary. I believe the business income is just ordinary income. So we're just going to subtract capital gains from the number. And so capital gain, capital gain, or 23, what? 23,875. So ordinary income is going to be equal to this minus this. So we have two different types of income: capital gain and ordinary. So we're going to put those there. Crap. So first of all, oh great, this is not how it works. So capital gain is going to be taxed at a certain rate, but first we'll figure out ordinary income. So are you freaking kidding me, dude? Now we need to figure out the tax. So we will go to the tax rates here at the end of the book, and they are married, filing jointly. We have married, filing jointly. We will take a snapshot of the correct one. So their income, their taxable income for their ordinary income is what? It's $105,000. So it's going to be this one right here, 22%. So their taxable income is in between 83 and 178 in terms of their ordinary income. So we'll take the screenshot right there, and oh, no. We will do this. Dang it. Why can't I just copy and paste the sneaking thing? So, can I please just copy and paste into Excel? That would be much easier. Hey, look, that worked. So now I don't have to save pictures like that anymore. Okay, so that's fine. So, we have equals, wait, hold on a sec. So tax is equal to 9615 plus 0.22 times parenthesis this number minus 83,550. So we have the tax is 9615 plus 22% times the excess over this number. So we've calculated the tax to be this. And then we have capital gain is 23,875. Capital gain. So now how do you calculate capital gain? Well, they're in the 22% tax bracket. Okay, so capital gains, married, filing jointly. And, oh my, wait, hold on a sec. So, oh my gosh, wait, hold on a sec. They did end up over 83,000, so they are in this bracket, therefore they're at 15% rate. They are at the 15% rate for capital gains. 15%. Tax is going to be equal to, how about we just go, rate is 0.15. So we equal this times this. And there you go, there's the tax. And then total tax is going to be equal to this plus this. And I probably got a different number. Well, actually, the number that you got, the check number is going to be the total amount owed, not the total tax. So I got a total tax, but they might owe less than this. Anyways, I got a tax of 17,979.66. So now let's go to the form. We have tax. Now I have to figure out what all this other stuff is. Is line 16 just the ordinary income tax, or is it both the ordinary income and the capital gains? That's the question. Let's open Schedule 2 to see what they're talking about in terms of Schedule 2, Line 3. What is Schedule 2, Line 3? We have alternative minimum tax. Oh my gosh. Generally, how much income should you have to pay an alternative minimum tax? But I might just skip the calculation entirely. It looks like if you have like over $500,000 of income, so they're not even close to $500,000. There's no way they have to pay an alternative minimum tax. I don't want to bother with the alternative minimum tax. Where's the exemptions? Like, you're going to subtract a certain amount of money. Dang it. You know what? I'm just looking here. Crap. Chapter 8, alternative minimum tax. We need to look at these exclusion thresholds for this. So, taxable income is $145 plus adjustments equals alternative minimum tax income. So it's going to be like $118,000 for married filing jointly. Dang it, I might have to actually calculate this. Because look at this. The exemption is only $118,000. Although their taxable income right now is what? Their taxable income is like 120 something thousand. So they might actually have to pay it. This is insane. What? Wait. But anyways, Schedule 2, line 21. through 18. Self-employment tax. There might be an additional Medicare tax. I don't think so. The investment income tax. Like, those only apply to people who are way more wealthy than they are, I think. But there's going to be self-employment tax. So anyways, the tax I calculated in Excel is going to be the one that I put in. So 17,979. So 17, 979.66. I might have to calculate alternative minimum tax. You've got to be kidding me. Wait a minute. I'm going to try to figure this out here. Time to get another Excel sheet. So, what do we do here? To get to the alternative to minimum tax, we have regular taxable income. So regular taxable income. It's going to be so fun to figure out what numbers I'm supposed to delete from. Like, come on! Please tell me I don't have to calculate this tax. Like, my goodness, there's no way. There's no way I'm going to have to. Like, I'm going to do all this. It's going to be all for nothing. Well, I'll at least try. Oh, come on. Regular taxable income is this. Standard deduction. Oh, what are we supposed if it's not standard deduction? Let's see. You can do so any parentheses are going to be okay. Schedule A. Net operating loss reduction. Alternative tax, net operating loss reduction, interest from specified private activity bonds. This is going to be insane. Calculating this is going to be just insane because there's so much different things. Man. You know what? I'm just going to skip AMT for now. This sucks. This is insane. Like, why? It's way too complicated. I don't even have time. Child tax credit, no. What is Schedule 3, line 8? Okay, are any credits or prepayments? Yes, there's going to be prepaid taxes. Dang it, what is... So here's what I'm confused about here. Wait a minute. So I'm gonna make my life easier and assume there's no tax for excess prepayment. Or wait. So I'm going to assume there's no additional Medicare tax, no net investment tax. All I'm going to do is have the self-employment tax, which is what? So self-employment tax was I'm just looking here. 11,440. I got like an exact number, but I'm just going to put 11,440. This 11,440 assumes that there's no alternative minimum tax. So our number for total tax is what? 17,979.66 plus 11,440. $29,419.66. Okay, federal income tax withheld from Form W-2. So we have $10,500. So 10,500 from W-2. And then what about the tax for the business? Estimated tax payments. So we're going to have 10,500 there. Then we're going to have estimated tax payments. Are we going to assume there's no credits that we're going to apply for this? I'm going to assume we don't have any credits. We're just going to have estimated tax prepayments will be $850 times 3 because it's 8. Oh, never mind. That's the Wisconsin one. 2,500 times 3. So we have 2,500 times 3. No. 2,500 plus 2,000 plus 1,900. So we have 2,500, 2,000, and 1,900. So we have calculated the prepayment of those to be $6,400. So we've calculated our tax prepayments of $6,400. So I'm assuming there's no other credits that we're going to have. No credits. Add line 25, 6, and 32. So we have withheld taxes, we have prepaid taxes, and we are going to have our total other, let's see, we have our total payments that we've made already. So 10,000, plus 6,400 is 16,900. Refund. If line 33 is more than line 24, it's not. You did not overpay. Amount. Refund, no. Amount you owe. So we're going to have an amount you owe. And it's probably going to be different from his number. So I'm just going to assume it's different. Because amount of tax that you owe that he calculated is 15,066. It's not like it matters. I could just put my number in, but I don't know. Let's just see what it is. So 29,419.66 minus 16,900. Are we going to get anywhere close to his number? No. Not close. I got $12,000. He said 15,000. Oh well. I'll just put my number in. So sad. So sad. Did I do the numbers right? 29,419.66 minus 16,900. And we ended up with 12,519.66. And we will add that to my numbers that disagreed. Tax owed. What I got for tax owed is 12,519.66. I know it's different from his number, but I'm just going to leave it there anyways. Because that's what I got with my numbers. So I'm not even going to calculate the penalties. So they owe more tax. Maybe that means there is an alternative minimum tax. So maybe I'll try to do the alternative minimum tax thing. It's going to be so complicated. Oh my gosh. Dang it. So which numbers do we not? I might just Google it because it might just be easier this way. Because what the heck? This textbook sucks. They only gave you like 3 examples of things you add back from the... They're like, oh yeah, here's a few examples. Hello, I need more. Oh, it's because our professor makes us memorize the entire freaking universe instead of just memorizing the information in our book. Come on. So basically, these 3 things that they listed, you don't even add them back. Those things you just leave. But every other itemized deduction... Okay, you know what? There's only a few itemized deductions to even take into account. Because Schedule A, we only have a certain number. We have medical and dental, taxes you paid, interest you paid, gifts to charity. So which one of these do we add back? Which of these? So, charitable contributions we do not add back. Home and mortgage expense, we do not add interest back. So now there's only 2 options, medical and taxes. I think we have to add the taxes back. Interest income is tax exempt for regular tax purposes. So do we add back the interest income, like the $200 of interest income? That's probably what we have to add. Tax exempt interest income. There was $200 of it, right? So I believe we have to add that, right? According to that. According to our book, it says interest income that is tax exempt for regular tax purposes, but included in the AMT base, is included in investment income. Wait a minute. Yeah, it looks like we add that. We add the itemized deduction for taxes. Now, what about the medical expenses? Well, let's add the taxes. So we have 10,000. Whoops, that's 100,000. Also, I'm running out of time here. How about medical expense? Do we add back the medical expenses? It says a 10% of AGI floor for AMT purposes. So that's going to be fun to figure out. We have to add back a certain amount, but not the full amount of medical expense that we... How do you add back the medical expense? Where is it? Where's the medical expense one? It's got to be on here. Come on. Where is it? It has to be on here. What? Oh, gotta be kidding me. How am I supposed to do the medical expenses one? It says medical expenses are subject to a 10% of AGI floor. So what we got for medical expenses is, well, we had $16,000. Medical expenses on 10% of AGI equals 0.1 times 181,690. That means they have to add back all of the medical expense. Not a single bit of medical expense is deductible. So we have to add back the entirety of the amount of medical expenses that we deducted. So that means we have to add back what? 2,000, this number right here. Copy and paste. So save. So those are the, there's probably other stuff we have to add. Come on. But I'm running out of time. So too late. We're just going to give up now. Well, not give up, but we have to wait till after I get back from my class to do the rest of it. This is so fun.